In this exercise, we need to complete the cost flow diagram by linking the yellow calculation fields to the green input values. Again, make sure you link to the data fields because when I change the data fields, your cost flow diagram should update. Let's go ahead and begin. Our beginning raw materials inventory, that was $2,300. Our ending raw materials inventory, $1,500. Our beginning work in process inventory, $7,600. Our ending work in process, $6,800. Our beginning finished goods inventory, $8,700. Our ending finished goods inventory, $10,300. Let's go ahead then and take a look at our purchases. Our purchases, raw materials purchase, $15,150. Our manufacturing overhead, we've got depreciation on the factory. We've got depreciation on the machines. We've got indirect labor. We've got property taxes on the factory. And we've got utilities on the factory. Our sales revenue, $61,000. We will calculate cost of goods sold and our under or over applied overhead. Our administrative expenses, $2,100. And finally, our selling expenses, $1,070. Also, we had direct labor of $26,500, and we've got applied manufacturing overhead of $10,000. And again, our applied manufacturing overhead of $10,000 would have come over from, or should be linked to, our manufacturing overhead account. And recall, the left-hand side is actual manufacturing overhead, and our right-hand side is the applied. And we would have applied that using a predetermined overhead rate multiplied by some sort of actual activity level. Let's go ahead now and calculate the missing items on our sheet. Raw materials. The left-hand side of our box sums to $17,450. Both sides of the box have to equal. The amount we begin with and purchased has to equal the amount we've used or have left over. So we can calculate the amount of direct materials used by taking the $17,450 and subtracting off ending raw materials inventory. That cost flows directly into work in process. Now we can get the total cost in work in process, which would be the beginning balance plus our direct material labor and applied manufacturing overhead. And that sums to $60,050. In accounting for that $60,050, we either have transferred it out as cost of goods manufactured, or it's left in ending work in process inventory. So the amount that was transferred out would be the $60,050 minus the $6,800. So we've got cost of goods manufactured of $53,250. That flows into finished goods, which means goods available for sale is the $8,700 plus the $53,250, or $61,950. Out of that $61,950, $10,300 was left, so we know the difference between the $61,950 and the ending balance is our cost of goods sold of $51,650. Again, that's simply flowing out of finished goods. We then have to adjust for under or over applied overhead. In this case, our total actual overhead was $9,785. We applied $10,000, so we had over applied overhead. We applied too much. Work in process was too high by $215, which means finished goods would have been too high by $215, which means then our cost of goods would be too high by $215. So we need to subtract that out. So we will simply take our $9,000 in actual and subtract the applied. That gives us our difference of $215. Our gross profit then is simply sales minus our cost of goods sold minus our adjustment. Our net operating income then is our gross profit minus our admin expense minus our selling expense. Our gross profit is $6,395.